Hey guys, and welcome to the latest weekly Cognitive Dissidents podcast. I'm Jacob Shapiro. I'm the Director of Geopolitical Analysis at Cognitive Investments, and joining me as usual is Rob Larity. We talked about the crazy week in markets this week. We talked about Mexico supply chains and the relationship between Mexico in the context of North America in general. And then Rob had some crazy thoughts about friction and ancient Assyria and the Ottoman Empire, and we explored those too. So we hope you enjoy it. Cheers and see you out there. All right, are you undisturbable?
I'm undisturbable.
It's actually a good adjective for you in general. Are you undisturbed by the market this week? I feel like this is one of those weeks where everybody who knows what I do has reached out and been like, "Oh my God, this sucks." Like even the people who normally don't talk about this. Do you have a similar sentiment, or just kind of par for the course?
Well, it always sucks. It's funny. I just read the new book by one of the chief research people at AQR, and it was a really good book. It's called Investing Amid Low Expected Returns. And one of the sections of the book talks about just the notion of certain factors that have always retained alpha generation potential in markets. So in other words, if you are long value and short growth stocks, over 100 years, there's a persistent alpha to be had doing that. And one of the comments that he makes in the book is he says, well, it's very easy to say this academically, that these models work and that you can stay the course when something's going against you. But when the market is going against you and you get sucker punched in the gut, it's a whole nother ballgame, because at the end it's a very emotional process. So that's why volatility exists, because people are emotional and they respond with their gut and not with the academic evidence.
Yeah, although that's always confused me, because when you get in a situation like this, like you've already been punched, right? So don't you just kind of have to take the hit? It almost feels like selling on top of the gut punch. It's almost like you're doubling down on the injury rather than I get being scared and then trying to pull it out because you're afraid of something. But in some sense, if you're exposed now, you already got hit by the bus. What are you going to do? You're going to sell everything just because you got hit by the bus? There's something, but I guess that's, to your point, it's emotional, not rational.
Well, I think there's two elements to that. So the first is you have to think in terms of layer upon layer of people throwing in the towel. So when you get the first drawdown in any market, the first people to step in and buy it are, the most bullish, aggressive, buy the dip style investors. Mm-hmm. So all the people who were buying meme stocks last year and, hold on for dear life and that whole mentality, they step in and buy, and then stocks go down again and they start to get nervous, and some of them will sell. And then the next group will come in and, the GARP guys who are looking at these high growth companies, and GARP means growth at a reasonable price, by the way.
I didn't know that. That's a terrible acronym.
Yeah, it's pretty bad. It doesn't exactly roll off the tongue. But they'll step in and start buying and say, oh, wow, this high growth tech company, it's only trading at 12 times revenues now. That's pretty good compared to where we were 2 years ago. And then that buoys things a little bit. And then the next leg comes down, and the people who bought in the first two dips start to get nervous, and some of them start selling. And anyway, it's this cascading kind of process where in many cases, until you get to the true value guys, it's hard to find a floor if it goes on long enough. But so that's the one thing. And then the other thing is just liquidity. So someone in our network who works with a lot of individuals, sort of an old, more traditional broker, mentioned recently that his clients are seeing massive margin calls because they were very aggressive, more margin calls than he's seen in many years. And if you look at the behavior of markets in the last 2 weeks, a lot of this feels like forced selling, because the stuff that had held up, real estate, utilities, commodity companies, cyclical industrials, some things like that. They've all, joined the rest of the market in getting walloped. So there's really nowhere to hide right now.
That's interesting. I mean, and that's interesting, and it speaks to our different backgrounds and the way that you and I process probably things in markets differently. Because for me, the thing that, and I don't want to say that nobody's talking about it. Like, there's usually somebody talking about something all the time, even when, like, the trope is, oh, the media is not paying attention. Like, usually the media is paying attention, just nobody's actually reading the article because it's on page 2 or 3. But like I was at an event earlier this week, and I was speaking at it in Austin, and I said, like, it's nice that we're all obsessed over the Fed and interest rates and inflation, all that other stuff. But like, what's really like scaring me is that, like, China's been shut down for a month now, and it's probably going to be shut down for another 4 to 6 weeks. And whatever you think about great power competition, they still make everything. So like, all the supply chain stuff that just was finally trying to resolve itself, I feel like it's about to hit us in the face again. And on the one hand, that's bad for, energy prices, because like the Chinese are consuming less energy. But on the flip side, I mean, in 2 to 3 months' time, like, we should see a real drop, I would think, in all the things that China makes and in demand for all the things that China consumes. And that's, I don't know, that's just a big whammy to take. That's where I'm kind of worried right now.
Well, you can already see that, I think. I mean, the stuff that China makes, that's a different issue because that's manufactured goods, and a lot of that will be driven by inventory levels in the US and how businesses are responding, because right now they're holding a lot of inventories. And, probably the next move is to try to bring down those inventories rather than build them. So that's a different issue. But as far as the things that China consumes, it's an interesting point to make, because one of the things that's catching my eye is over the last 2 weeks or so, you saw a notable divergence that you didn't see before, which is that industrial metals have started rolling hard, and yields continued going up during that time. So if you were to look at the 10-year US Treasury yield and map it against copper prices or steel, or take your pick, those were moving in fairly close lockstep. And then in the last 2 weeks, copper prices, for instance, this morning are at just over $4 a pound. 2 or 3 weeks ago, that was $4.50, $4.60. And yields, which are just starting to recognize that, were remaining levitated. So I think the Chinese impact has already been making itself felt. And you don't have to wait 2 or 3 months, because you can see it happening now. And it's not just copper. You can see across all the industrial metals, there's been a real rollover after the bolus that you saw with the initial, Ukraine conflict breaking out and those sorts of things.
Yeah. And the other thing, I just wrote this line for our sit rep readers that's coming out on Saturday, which is just that whenever China does get things under control, I mean, the amount of stimulus and the amount of supportive measures the Chinese continue to announce to support the economy, I mean, they're just rolling everything out. So if and when they can flip the switch again, I mean, it's probably going to kick into gear very fast. But that actually reminds me of something I wanted to ask you, which is, I mean, we've basically had a massive bubble. We had the COVID sort of collapse, then we had another bubble, and then a massive collapse. And like, this stuff all, like, I understand that markets and stuff are cyclical, but it all seems to be happening in a very compressed time period. Do you think it's just going to continue like this, where we're going to get these compressed bubbles and collapses? Or do you think we're going to get back to a longer economic cycle at some point?
Yes and no. In many ways, we've been in a volatility spiral for the last 10 or 15 or 20 years. And I think this is a natural outgrowth of that. Volatility spiral meaning just volatility around policy, around macro cycles, around trade. And this is mostly poetic license, but I like to date it, the bottom of the volatility cycle to the day before the September 11th terrorist attack,
Hmm.
which, if you look back, things. It's funny. Remember in The Matrix how they said to Neo, "Well, we created this simulation of human society for you at the peak of your civilization," and it was in 1999, 2000.
Yeah.
And in some ways, they bottom ticked the volatility cycle even then. Um, but I think this is an extension of that, because volatility begets volatility. Um, when things get crazy, it causes things to get crazier. So I think, buckle up, because this isn't going away. But on the other hand, the other thing I was thinking about, which I'd love to hear your thoughts on, is, um, from a policy standpoint, obviously we've seen a truly extraordinary intervention in terms of both fiscal and monetary policy under COVID. And, our friend Marco coined the term the Buenos Aires consensus, uh, which is to say that spending money is now going to be kind of the new norm, and uh, all the things that Do you think that has been taken off the table now with inflation, and that there's a new sort of recognition that restraint suddenly is back in favor? What do you think?
I would say no. Absolutely not. Um, but it's funny. I mean, Marco had the Buenos Aires consensus. I remember writing years ago, and it was not as pithy as Marco, about, I called it America's Victorian Age, and was sort of playing around with this idea that when dominant global powers like the United States or like the British Empire in the late 1800s, when they reach their sort of peak decadence, their their neo moment, if you will, is usually when all fiscal discipline goes out the window. And if you compare sort of British debt in the 1800s, they have a major war that with France at the beginning of the century that they have to spend a lot in order to eventually defeat Napoleon. And then they're sort of the undisputed power for a really long time. And as that happens, and as they sort of accidentally back into India as this, to supercharge the strength and the economic resilience of the empire, debt just goes through the roof. And I mean, economic growth goes through the roof, everything goes through the roof, but there's this sort of focus on the present and on spending things now because times are so good. And that, of course, eventually ends in World War I and Europe basically collapsing in on itself. And I've been worried for a long time that the United States sort of went that route after 99, 2000, because I mean, it's one of my first political memories where I was old enough to sort of know what was going on in the conversation was the idea that Clinton balanced the budget and that Bush was coming into office with a fairly healthy balance sheet for the United States government. And you can't even imagine that now. I mean, if we go back over the past 20 years, the amount of capital that people have spent that's been sloshing through the system and debt spent, all that stuff is just going up. And I don't see any reason for that to stop anytime soon. I mean, we're addicted to the cheap stimulus, and we've let this thing get so out of hand that if you really wanted to curtail, I mean, I guess you could try and curtail that kind of spending and stimulus in the system, but you'd be doing kind of what the British did in the 1920s. Like the rest of the world's going to grow really fast, but you're going to go back on the gold standard or ally yourself with some notion of fiscal discipline. It just means that everything's going to suck for you and everybody around you is going to keep doing it. So unless you have a global consensus there, you sort of have to go along with the pack. Am I being too cynical?
I don't know. I mean, how is the current dynamic that different? And this isn't a rhetorical question. I'm curious to know really what you think. But how is the current dynamic different from the way it's ever been? I mean, politicians have always been short-sighted. I guess you can argue that U.S. politics is more short-sighted than it was previously. But I don't know if that's so different, systematically than it was, 30, 40, 50 years ago. And then you see these periods like the late 70s, the Paul Volcker era, where when things get bad enough on the inflation front or otherwise, you get the mandate to come in and clamp down. And I wonder if you're seeing that already now, where the story has switched to, which side can distribute the most goodies to their supporters to, well, which side can blame the other for the inflation and claim to be clamping down on it, quicker than the other.
No, I mean, I think you're right. I mean, things have to get really, really bad before people put aside their sort of partisan blinders or the easy things. And I've said for a while, like, the United States is in a difficult position, and wealth inequality is really high, and deficit spending's up, and debt is very high. All these things are true, but the American population is not feeling enough pain to send people to Washington who will actually fix the problems. We're sending people to Washington because they virtue signal on particular views, and the main conversations that are happening, if we're speaking specifically about U.S. politics, it's all identity stuff, value stuff. It's not actually based on, well, how do we fix the system to move forward? It's one of the reasons I've always loved geopolitics, because I get to basically ignore the domestic U.S. stuff, and things like the European Union and even China are way more interesting to me, because the European Union is literally talking about how to completely restructure the European economy and European politics and notions of European sovereignty so that they don't get rolled over by the rest of the world. China, whatever you think about Xi and the communists, what they're attempting to pull off right now, changing their economy from a Ponzi scheme into a legitimate, industrial superpower and center of economic gravity within the Asia Pacific region. It's a fascinating experiment. I don't know that anybody's done it quite on the scale that they have before. So no, but your question was, have things changed that much? No, I don't think things have changed that much. It's just we have a 24-hour news cycle, and we're all on our phones, and we can be bombarded with this cheap fast food about how everything is crazy, rather than just kind of experiencing it in the normal, or what used to be the normal course of life, I guess.
Yeah, it's interesting because we're talking about this, and the numbers just came out yesterday on the U.S. Surplus. The federal government surplus was, I think, $308 billion in the month of April, which was the biggest budget surplus we've posted, I think, ever. And it's pretty interesting to see, because I did not think that those deficits would be reversed as quickly as they proved to be, which from a markets or macro standpoint is really important, because, whether we run surpluses for some extended period, I'm just as skeptical as you are, but just the second derivative change that we've seen from massive deficit to now moving very sharply into surplus, that's a huge negative credit stimulus to the U.S. economy. So I think that's a key factor to think about when everyone's thinking about inflation and overheating economics right now.
Yeah, it's funny you say that. I was talking to somebody in our network on Tuesday, and he'll actually hopefully come on this podcast here in a couple of weeks, and he's sort of tangentially linked to venture capital, tech kind of money, and was just talking about how grim the situation is there, and how much things seem to have overextended themselves, and that there's probably a lot of pain coming. But he made a really good point to me, which goes to your point about the surplus, which is, and what did the House just do this week? $40 billion more for military aid for Ukraine, which apparently military spending in the military industrial complex is the one thing that the U.S. government doesn't mind just throwing however many billions at, it's very casual, without any kind of, is that actually going to improve the U.S. economy? Is that actually going to achieve any real strategic goals in the context of the Ukraine-Russia war? I don't know, but we gotta go send the Ukrainians $40 billion worth of weapons. That's sort of the level at which we operate.
Yeah, I was thinking about that just this morning, because I was thinking, well, if it's politically difficult to come out and try to approve, domestic spending right now for obvious reasons, where does the attention go to? And I was wondering if you could potentially see a resurgence of not necessarily protectionist measures, but sort of have the attention shift toward anti-China or domestic support measures that aren't exactly spending a lot, but that's one of the areas where both sides could agree on, just like the Ukraine situation. Everyone knows who the bad guy and the good guy is, and no one would want to be seen not supporting that. Do you get a similar move, on other issues where everyone agrees, China is a major threat, and we can all cross the aisle on that one, and that's where some of the attention shifts to, or is that kind of out of sight, out of mind, do you think?
I think Ukraine's taken over that because the Biden administration was leaking this week that they were thinking about removing some of the Trump era tariffs, and they've been talking about reviewing, U.S. policy on China for ever since Biden got into the White House. But now they're actually talking about removing some of those tariffs. So in some ways, that's the opposite of what you're talking about, and goes back to the concerns over China supply chains. I'd also say, for those of the listeners who are in the United States, which is probably a large number of the people who listen to this podcast. We all know who the bad guy is in the Russia-Ukraine war here from our perspective. But when you look out around the world, like there's not a lot of agreement about that. I don't know if you saw the big interview Lula did with Time Magazine. Lula's probably going to be the next Brazilian president. He was blaming Biden and Zelensky for the Russia-Ukraine war. And that's Brazil. That's like arguably the most important country for U.S. foreign policy going forward here, I might argue, just because of where it is and how big it is and what its potential is and what it would mean if Brazil was not aligned on some level with the United States. So, and the other part of that is that it's also remarkable how the Russia-Ukraine war has just kind of normalized. I mean, it feels like it's just kind of part of the discourse right now. I mean, that happens with all conflicts. We can only freak out about things for so long, but it just kind of feels stuck there in a way, and that there haven't been any major developments. It was actually, from my perspective, a relatively quiet geopolitical week, if you can believe it.
I don't want to talk too much about the U.S. because we're doing a presentation for friends and clients tomorrow on the U.S. economy and sort of a differentiated view. So I don't want to tip our hand too much, but do you think we can make that available to the listeners of the podcast if they email you, Jacob?
Sure. Yeah, why not? Hit us up.
Let's see, why not? So let's go abroad and get out of U.S. funk a little bit.
Yes,
so
please.
you wrote about this TMEC corridor in the SITREP last week, this Mexican corridor to Canada. Tell me about that, because I only looked at it briefly, but it caught my interest and I don't know too much about it. Is it important? Should we be thinking about it?
Yes, I mean, I think so. I mean, the interesting thing about this week was that, so after all that stuff came out last week, President AMLO of Mexico was doing a little regional tour of a lot of Central America, and he was in Cuba in particular, and sort of criticizing the United States and Cuba, and threatening that he wasn't going to attend the Conference of the Americas if Venezuela and Nicaragua and Cuba weren't allowed. Which is the first real clash between kind of Mexico and the United States since they were able to put their differences aside once Biden came into office. So I think the bigger story there is that Mexico is trying to become a more independent actor that can have some more leverage as a result of its geography and the things that it does in the United States. And you can even see that in the recent spat between Mexico and Texas over Texas trying to block or at least hold up some of the supply chains across the border because of concerns about security, and Mexico basically just saying, okay, we'll go to New Mexico instead. Like, we don't need you, Texas. So I think there's a lot of that in there. I also think that just in general, as we go towards a world in which globalization is not the most important thing for the United States, making sure or ensuring that North America in particular is linked politically, economically, supply chains, all of these things, is really important, and how much success the United States is going to have going forward is largely going to be based on how it sort of manages those things. So yeah, I think it's a major indicator that gets lost in sort of, oh, Mexico cartel wars, oh, Mexico migration. But the real story there is like, are the United States and Mexico going to work together? Are they going to be able to leverage the advantages of both, rather than maybe compete with each other and hamstring each other and constrain each other if they continue to work at cross purposes?
And can you just explain, what is this TMEC corridor? Like, what is it exactly? Is it I'll let you, because I'm sure many of the listeners don't know, and frankly, I don't know either. So.
Sorry, I just accidentally muted myself there, listeners. I'm really skilled at technology, as Rob will tell you, based on my excellent consulting skills with his microphone problems earlier. The corridor, it's really it's part of the U.S. Mexico-Canada agreement, and it's aimed at basically connecting Mexico to the rail and logistics systems of Canada and the U.S. to try and cut freight and transport times. So we're talking about billions of dollars to create a logistics corridor that would make it easier for the Pacific coast of Mexico to be hooked up with the U.S. and go all the way to the Canadian city of Winnipeg, and back and forth. And you would think that all this infrastructure is built, but it's really not. Like U.S. infrastructure either points out from the Atlantic or the Pacific into the rest of the world, or you've got some transcontinental infrastructure. But there's a real need for more infrastructure from a north-south perspective to link Canada, the United States, and Mexico together. And I think there are some projects that are within the TMEC corridor. I'm not like 100% well versed on which projects are, but it's really, I think, that broader idea of how does Mexico and the United States and Canada all work together, and how does that infrastructure get linked so that all of those supply chains get more efficient, get more reliable, get safer, things like that.
It's an interesting topic, because we've done some research on this in the last 4 or 5 years, but not too many people pay attention. But it's kind of interesting to look at what's going on with the U.S. railroads. So this is sort of flown under the radar, but basically there's been a bit of I don't want to say a battle, but certainly a lot of bad blood between U.S. railroads and shippers who use them, big industrial and manufacturing companies and things like that, food companies, that kind of thing. And essentially what it comes down to is a lot of the railroads, which are primarily, there aren't that many of them anymore. It's mostly Union Pacific and Norfolk Southern on the East Coast and CSX. But essentially what they've all done is pursue this precision scheduled railroading strategy, which has really swept over the industry over the last decade or so. And the idea behind that is essentially to restrict service in order to juice profits. And it's kind of interesting, because the only railroad who hasn't adopted it is Burlington Northern, which is the only major railroad that's not a publicly traded company. So when you talk about public versus private incentives, it's an interesting case study right there, because Burlington, as many people will know, is owned by Warren Buffett at Berkshire Hathaway. But there's been a lot of back and forth, and recently there was some new noise out of the Surface Transportation Board, which is the group that's charged with regulating these railroads, where they appear to be starting to clamp down on this, because the shippers have really made a fuss and complained about, you're basically throttling the American railroad system by not running as much volume as you could, or running it as frequently as you could. And in an era of supply chain snarls and bottlenecks and all the things that we're dealing with, there's less appetite to let that go on. So it's kind of interesting, if there is a push to really invest in these infrastructure and transport corridors, especially in sort of the Southwest and the western part of the country. I wonder if that's going to provide a bolus to that push to fight against precision scheduled railroading and sort of, that whole approach, which admittedly has absolutely, juiced the profit margins of all these railroads. So if you're interested in kind of monopoly issues and things like that, it's an area to watch.
It's like Nietzsche's eternal return of the same. It's like we're doing railroads at the end of the 1800s, and then boom, we're doing railroads again in the 2020s.
How far we've come.
Not that far, it turns out. What else is on your mind this week, Rob?
Well, the railroads is a nice segue to it. And speaking of bottlenecks and delays and things like that, because I'm thinking about friction, and I want to lay out some different disconnected anecdotes that I've been thinking about, and then I want to hear your thoughts about this, because this is kind of a big idea.
Love it. Let's do it.
It's a big topic, friction. So here's what I've been reading and thinking about recently. So I just read the excellent book by Javier Blas, who's the one of the commodities reporters at Bloomberg. It's called The World for Sale, and it's basically a history of the big commodity trading houses, Glencore and Trafigura and those guys. And the theme of the book is a familiar one, which is spreads get tighter over time. So, most of these guys had their start in the 1960s and especially the 1970s with the oil embargoes and those things. And you could generate extraordinary returns by basically just being an aggressive guy with a Rolodex, because information was so bad. There was so much disconnect between buyers and sellers. No one knew what was going on. You're connecting people in different countries who literally don't know how to speak to each other because they don't speak the same language. They're geographically separated. It was a great business. And over the years, this is sort of the narrative that the writers give. Things became more professionalized. Things became more streamlined. Information became easier to get. And now you can open up the Bloomberg and see satellite tracking pictures of every ship on Earth, essentially, and where it is right this second. And so spreads contracted over time, and different trading houses did different things to cope with that. So I'm thinking about that, and then I'm thinking about I told you last week that I was reading Herodotus again, and I was reading about the Assyrian Empire, which is really interesting because I never quite thought about it this way, but there were no real empires until then in that part of the world. There was all these city-states. They're very separated. The transport between them was not very good. And they would compete and fight against each other, and sometimes they would conquer each other. But it really wasn't until the Assyrians came around that someone was able to dominate and control that whole part of the world, the Near East. And one of the theories is that it was primarily because of their ability to build good roads. And I'm sure you know all about this, Jacob. The original king's roads were the roads that the Assyrians made, so they could basically fast track the army to wherever they needed to go, kick ass at any particular time. And so I'm reading about that. This is like, I'm going all over the place here, and this is not going to come off well. And then a few weeks ago, I'm reading about the Ottoman Empire, right? So this was a fact that, as a nerd, I find very interesting. Maybe it's extremely dry and not interesting at all. But so everyone always thought of the Ottoman Empire as this super centralized monarchy, essentially. And it was quite the opposite, because the friction and the inability to transport things quickly or to move quickly between the different parts of the empire over time got worse and worse. And between in the 2 centuries from the 1500s to the late 1700s, there was zero growth in per capita tax receipts for the Ottoman treasury, which that sounds very dry, but just think about that. Zero tax receipt growth over 2 centuries. And the reason why that's interesting is because when the telegraph was introduced in the 1800s, the Ottoman Sultan, I think it was Abdul Hamid at the time, he was very enthusiastic about the telegraph because he said, well, now I can use the telegraph. They weren't investing in anything, but they wanted the telegraph because they wanted to be able to send their envoys out into all these little local areas where the local lords had been siphoning off all the tax revenue, and they wanted to essentially put them in line. So you saw this really interesting centralization of power that was very rapid, and bucking the trend of the previous few centuries, just because the friction of communication went down with this new technology. So these are all totally weird, unconnected anecdotes, but the reason I bring them up to tie it into today and why it's relevant or why I'm thinking about it is going back to the trading houses and how the friction in the global economy has come down and communication has improved and the information flows have improved. Do you think that what's going on with Russia and the bans on Russian exports and sort of this rejiggering of global supply chains, is that going to introduce more friction into the system? And is that good for these trading houses? Like I look at Trafigura, for example, these guys are all experiencing liquidity stress right now because the surge in commodity prices has caused them to be served with margin calls because they hedged their commodity exposure with futures. So they're not doing well in that regard. And a lot of people are worried about the liquidity risk to these trading houses right now. And they're trying to secure credit lines. And the 2025 bonds of Trafigura, the 3-year bonds yield 8.5%, which is basically, the market saying, hey, these guys are screwed. But I just wonder, could we be entering an era where companies like that, companies that thrive on friction in some ways, could be doing better rather than worse?
That's an interesting question. Of course, every good young Jewish schoolboy who went to private Jewish school knows everything about the Assyrians and how in 722 they came and conquered the Israelite kingdom, and we don't have to go off on all that to the listeners. But
they were very nasty is the short version of the story.
Well, they lost in the end. So, I mean, I'm sure that whoever wrote the histories, Herodotus probably didn't have much reason to say very nice things about the Assyrians, and certainly the Hebrew Bible doesn't. But we should probably open up a bottle of wine and say, hey guys, this is the Assyrian Deep Dive podcast for the three of you out there who want to listen to that conversation. Although I kind of want to listen to it too. But as for friction, I think the answer to your question is both are going to happen. So there's going to be more friction globally. Like we are in a globalization recession. That much is clear. So supply chain professionals, all these companies, it's difficult to exaggerate what a big bet most of the world made on China, whether it's German industrial companies like Siemens or whether it's US companies like Starbucks. I mean, literally everybody was enchanted by the size and the potential of the Chinese domestic market, by the cheap labor that China had to build things, by the ability to transport things cheaply over the oceans from China and get them where they needed to get. All of this just-in-time supply chain dynamic that got us into such trouble in the context of the pandemic. That's really how the global economy has been oriented for decades now, and that's all going to go away, and that's going to feel really, really rough. And for companies that bet too much on China or who didn't see the writing on the wall early enough, it's going to be really difficult to maintain comparative advantage. The companies that were able to identify different hubs or build resilience into their supply chains are I think the ones that are going to do well longer term. But the flip side of that is that within some of these regional power centers, I think you probably should have less friction. So, I mean, we're talking about it, and we were just talking about it in the context of Canada, the United States, and Mexico. If that's going to be a viable geopolitical source of power going forward, then all that infrastructure has to have much less friction. There have to be more railroads and more roads and easier financial conditions and easier ways to trade and less tariffs and less politics. All that stuff has to happen. The same is true of the European Union. In some ways, the story of the European Union for the next 10 years is how much friction is there going to be? Are they all going to be on the same page? Is trade policy going to be completely oriented? We could talk about South America from this point of view. Are the Mercosur countries going to work together? Is Uruguay going and negotiating its own free trade deals because it's so fed up with all the friction it gets from Argentina and Brazil and everybody else? I shouldn't say everybody else. There's like one more country in Mercosur, but you get my point. They're just going off and negotiating their own free trade deals because they couldn't put up with the friction anymore. It was too much for them. So I think there are going to be opportunities to build what's the right way to say that? There's going to be less friction in some of these areas where economies scale and things get more local and regional. But at the global level, yes, we're probably going to see really, really high levels of friction going forward. And even if my optimistic reading of these local and regional factors is correct, that's going to take years. So I think that's one of the reasons we're seeing inflation. Like the inflation in the short term is about rebuilding some of these supply chains or investing in new infrastructure, training new workers and new professionals to understand a different world than they've ever had to deal with before. All of that is upfront capital and upfront money that you're going to have to spend in order to get away from the friction long term.
And in technology specifically, do you see any areas to focus on other than semiconductor capacity and 5G standards and equipment where everyone is scrambling to get their own stuff now? Because I find the technology thing particularly interesting. Like we talked about railroads and just transportation and things like that. But if you listen to what Carlota Perez writes in her great book, Technological Revolutions and Financial Capital, I think it's called, which a lot of the tech guys have been talking about over the last few years. She makes this point, which I think is a really good one, which is with every technological revolution, you've seen the ability to tie wider and wider geographic spaces together. So with steel and steam power, you could then have these imperial dominions stretching, from Europe into South America, and everything could sort of work together, and it made sense, and so on and so forth. As each new technology comes, it wants to spread into a wider and wider network, and kind of the ultimate, hypothesis of that is compute, and yet you see this in other areas of tech where you tend to center on one standard. Things want to centralize, and that's the natural dynamic. And yet now you have these political factors that are emerging, these sort of artificial barriers. And you've written and spoken a lot about 5G in the past, Jacob. But what are the big ones that you think we should be thinking about and other people should be thinking about?
Yeah, I mean, in some ways, this question is impossible to answer. Like we're throwing darts against the board and hoping some of them stick. The easiest one, and you've already alluded to it for me, is energy. And I mean, we're going through a major energy transformation. Like there has been underinvestment in things like oil and natural gas and coal for political reasons for years. There's also a lot of growth in renewables, and the problem is there's just a mismatch between how much energy we consume and what energy growth is, and how much renewables are actually going to be able to scale. But I sort of view the energy transition as sort of similar to where the internet was in the early 2000s, or even previous energy revolutions, because we don't know which one of these technologies is going to take off. Is it going to be hydrogen? Is it going to be electric vehicles? Is it going to be nuclear? Is it going to be smaller modules of nuclear? Are we going to talk about Thor? There's so many things on the table, and so many like interesting and potentially transformative things happening, but nobody knows which direction it's going to go. I just do think we know that by the end of the decade, our energy mix, how we use energy, how we store energy, all that's going to look very different. And I think that's going to be an area of significant disruption. The two other ones that I wrote about in a pretty speculative sort of 10-year forecast of what the world is going to look like was space-based platforms and biotechnology. And I wrote that report before the pandemic. I mean, I think we take for granted just how incredible it is that we have COVID-19 vaccines at all. I mean, the extent at which biotech is innovating on things like mRNA vaccines. We also have, in most of the developed world where most of the capital is, demographics lead to aging populations. Aging populations want cures to things and are going to be willing, I think, to throw money at research and development and infrastructure for all that. I think that's a very important space. And then I just punned myself into space-based platforms, whether it's, I was listening to Pippa Malmgren talk earlier this week on a Twitter Spaces that I participated in with Real Vision about space-based solar and how that's going to change everything. My old mentor, George Friedman, I've heard is talking about space-based platforms too in that context. But I do think there's an emerging competition for space, which, if you'll allow me to show my own political stripes for just a second, depresses me a little bit. It would be nice to fix the planet we have in front of us before we start mucking up space. And I think how to use space and how to take advantage of space, both for issues of national security, but just in terms of connectivity, I think those are going to be sort of three areas that I'm always focused on. But I mean, the real answer to your question is nobody knows. I mean, the technology changes really, really quickly, and all it takes is one discovery that neither you or I have any visibility into to change the world, and that happens sometimes. Let's put a bookmark in that, and we'll come back to technology and the Assyrians and Nebuchadnezzar and all the other useless trivia information that Rob and I have accumulated over our careers. But in the meantime, Rob alluded to a webinar that we're doing tomorrow on the state of the U.S. economy and U.S. macro and all those other sorts of things. If you want the recording, just drop me an email at jacob@cognitive.investments. I'll get it to you. If you hear this before the webinar and you want to participate, same email, hit me up and I will get you the link. And otherwise, this was the second episode of our weekly podcast, me and Rob together. Send us your feedback on how it's going. If there's weird topics that you want us to address, send it to us. If the ancient Assyrian Empire is completely useless for you, you can tell us that too. You won't hurt our feelings. Just let us know. So, Rob, anything else to tell the folks at home before we get out of here?
I don't think so. Thank you, Jacob.
Okay, cool. Cheers, y'all.
Yep.
Thank you so much for listening to the Cognitive Dissidents podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there.